Hey folks, Pat Mitchell here, and if you have ever wondered what it takes to make your first $1 million in day trading, this video is going to be for you because I'm going to share some insights on my personal success story, on how and what steps I took to make my first $1 million day trading. Now, first of all, let me tell you, this was no short road to success. There was a lot of work involved, and I understood that right off the hop. Right at the beginning, I devoured information, education, books, anything I could get my hands on. That's kind of the first step. And really focusing in on technical analysis and market psychology. Those are the two things that I really gravitated towards. And I devoured anything that I could get my hands on. Now, fast forwarding a little bit, once I kind of weeded through all the garbage out there, I focused on what I knew was actually working. That's a super important part. Don't be wasting your time with stuff that isn't producing any type of results. But there's a catch to that. So at the beginning, when you're a new trader, there's going to be times where it's like you're unsure of, like you're not giving it enough time, is what I'm saying. You cannot give something, especially when it comes to trading, just a couple of days and be like, oh, it's not working, and move on. It doesn't work like that. You need to give it a sufficient amount of sample size. You need sample and pool size is what you need in order to develop strategy, which is the second part, developing an actual strategy, knowing the difference between what is strategy and what is setup. Now, you can develop a strategy based off of a setup, and I'll give you an example of a setup. A setup could be a double bottom, a double top, a higher low, a lower high, whatever it is, opening range breakout. That's not strategy though. You need to develop a strategy that fits for what you're able to see at that time. Remember, we're talking the bare bones beginning aspects of your day trading, where right at the beginning, you need to know what you have an eye for on those charts. You have to know what you are comfortable with and what you're capable of actually executing. So once you recognize that, for me, it was actually the very first thing I ever noticed was a higher low. It was on Apple. I noticed at that time, Apple was trading. It would sell off. It would put in a low. It would come back up, pull back. And right before it hit that low, that bottom of day, that low of day again, that's where it came up. Now, it was just that very first revelation that I had, that first idea like, Apple is continuously doing this. So how can I develop something to get me involved with that stock before it comes into that bottom? Because it's not going to come into that bottom. So I started developing that strategy based on something that I recognized on the charts, a chart pattern on Apple. And then obviously it's going to evolve from there, but you have to start somewhere. And that was the key. Super important note is once you have found something, you need to stick with it. You need to practice that one kick 10,000 times. Don't be trying to practice 10,000 kicks once. It's not going to work and you're going to spin your wheels. You are going to be the equivalent of a crow chasing shiny objects, just going after one thing or another. You'll never get consistent or good at anything like that. You cannot do that. This takes focus and discipline. Risk management is the next step. Developing an actual risk strategy. So first we have our entry strategy based off of that very first thing that we're kind of noticing, right? Next is a risk strategy. How and where do I stop out? Because at the beginning for me, I took some painful losses. I wiped out accounts, the whole nine, because I didn't have that in place. I had my initial strategy, my execution strategy, but I did not have a risk strategy. And that is such a game changer. When you have defined risk, and you need to remember, you cannot just build a risk strategy based off of emotions. Just because it broke your support level by this much, that's not sufficient amount of risk. This is where you really need to take the time and go through, take a look at the charts and see what the average is that it likes to break a major support level. And that's a little hint to my risk strategy, which I call standard risk. That is a game changer. Now, there's other ways that we can use risk and develop risk strategies. Another one is based off of a technical support level. You give it a certain amount of risk. or a certain amount below that support level. You need to develop a full-blown risk strategy, not just some cockamamie, I'll stop out because it's 20 cents below that level or something like that. No, that is not a risk strategy. That's on the same lines as having a setup and not a strategy. So a risk strategy comes next. It is extremely important. Step 4 is scaling up your trades. Size up, sizing up. Now we have our execution strategy, our entry strategy. We have a risk strategy, and now we need a sizing strategy. Sounds like a lot of strategies, but that's what day trading and all trading boils down to. It boils down to trading strategy. It is strategy all the way, all throughout, no matter what you're doing. So sizing can be very difficult. A lot of people, that's one of the number one questions that I get, and that's why I've developed the Trick Trade Size Up strategy. It is a full-blown size up strategy designed to take you from a $2,500 account and trading one contract or a very few amount of shares, growing that within a defined period of time, 6 months. And now it's actually less. We had our first graduate of Evolution 1, which took them all the way to make $600 a day average and build that $2,500 account to $18,000 following our exact sizing strategy. Now, with all of that aside, that's what you need. You need a sizing strategy, something very specific that tells you when to size up and how much to size up, because without that, you are going to be all over the place. And the problem with that, where a lot of people don't think, if they're all over the place with their sizing, like some trades they'll take, let's say we'll just use a small amount of shares, for example, 50 shares on this one, 100 shares on that one, 150 on that one. Your results are going to be all over the place. And unless you're keeping tabs on that, you're not going to really be able to track results properly. And you could be on the road to success, but because you took a bigger loss, because you sized up on one trade, it's going to mentally destroy you. And we can't have that. It's about being mentally stable. I know that might sound funny, but it's extremely important in trading. You need to have that confidence and that discipline and that skill and mental stability in order to progress. So again, this step with sizing strategy, I cannot stress the importance of this. This was a game changer for me. Once I understood how to properly size, that's when everything went, it took off like an absolute rocket ship for me. The next step is about reviewing. Now, I'm not talking about necessarily, a lot of people will use like a tracking app. They'll throw their trades in it. It gives them a bunch of data, and you look at the data and you don't understand the data and it doesn't do anything for you. It's essentially busy work. Okay. So how I like to do it is just essentially just take my trade entries on the day and review the chart and see where I could have improved without looking at it necessarily in hindsight, part one. And then part two, where I could have improved using hindsight. A lot of traders will use that word hindsight. Oh, that's just hindsight. And they don't realize that hindsight is your absolute best friend as a trader. This is how we know what happened and how to fix that for the next time. So reviewing your trades every day, whether it's a good trade, a bad trade, a red trade, a green trade, a flush trade, it doesn't matter. You need to know what you were doing on the day, how the market was trading that day. These are the metrics that matter. Where was the market? Was the market at all-time highs or up at highs, down at lows? Was it consolidating? We need to know what type of market it is, number one. Number two, we need to know where we could have improved on the day, because there's always room for improvement. And whether it was a green trade or a red trade, it doesn't necessarily matter. It's not about being red or green. This is a very hard concept for a lot of new traders to understand. I can already see comments in the comment section. What do you mean? Nobody wants a red trade. Of course, nobody wants that. But when you're trading strategy, it doesn't matter at all. Strategy, you will never be 100% success all the time, right? So then we need to understand, was that a trade that I took that, although it was red, was it to my strategy? Yes. Okay, then it was a good trade. It doesn't matter about being red or green. So reviewing your trades and looking at it from an actual professional perspective is a game changer. The sixth and final step here, and probably one of, well, the most important is mental discipline. This is a long road, okay? It's not just mental discipline, it's just discipline in general. One of the most difficult things, and I've taught over 35,000 traders at this point, the biggest flaw I see in people's games is their discipline. And it's the discipline to do things properly, day in, day out, no matter what, and have that discipline to catch themselves that, okay, I'm having an off day, I shouldn't trade, okay? To really look at this and take this from the most professional perspective you possibly can is the only way that you will gain success from this, folks. And it is the way that I made my first $1 million. I didn't hit some big trade that just boosted my account up. These are from small, consistent wins. And this is the way to do it, because the more disciplined you are, once you really fall in love with the process and the process of discipline, it's impossible. Mark my words, it is impossible to fail, and you will have nothing but success in your trading and in your life. So working and developing your discipline and your mental discipline and mental motivation is going to help you immensely, because what you're doing here as a trader is very different than any other career path on the planet. And remember, over 90% fail. And that's just that 90%. Everybody's heard it, 90, 95%. Doesn't matter. Doesn't matter what it is. That is just to gain consistency, okay? To make it 5 years or plus, that goes down to 1%. To make it longer than a decade is 0.1%. Now, I've been doing this consistently and professionally for over a decade. I'm in that 0.1%, folks. So take it from me when I tell you and give you these points, because they are extremely important, and this is the exact way you need to do it. So if you have any questions whatsoever, please make sure to comment below and ask me. I will be sure to answer. And there's over 50% of you that are not subscribed to my videos. Please make sure to subscribe. I do appreciate that, and give it a like, and we'll check you on the next one, folks. Adios.